So Lindsay, it's been really great. I mean, if you're looking at from a group perspective, the customer base now growing to 54 million customers, up 10%. South Africa, just over 30 million customers, and us adding close to 950,000 customers for the first half. So, it's really been a great set of results, and obviously international, adding 2.4 million customers.
We'll stay with South Africa for now, but that 950,000 increase in 6 months, an impressive figure, suggests that you're gaining market share.
Very much so, and I think our pricing transformation and focusing on best network, best value, and best service has really basically proven to be very successful.
Data revenue up 29%. That's been a story for quite a while now, but every time you see the numbers, they still look very, very impressive. Can you tell us more?
Well, I think, firstly, data is growing quite significantly. So what's nice is that, we now have 6 billion of revenue coming from data. But what's been impressive is that the South African data growth has just been over 20%, and international has grown by 100%. In South Africa, we now have 15 million active data users, and in our international markets are sitting at just over 6 million active users. Yeah. So what we've managed to do is grow the base of customers using data by pushing more smartphones into the market, but also the average usage per smartphone has grown in South Africa to 220 megs per customer, which is a 70% increase. So a very impressive growth coming through in data. The overall data traffic, Lindsay, has grown 70% in South Africa and 80% in all our combined entities.
And that's with 15 million data users in South Africa, and you've got 30 million of subscribers, users. So you've got quite a way to go. So that suggests that the numbers that we're talking about here can be replicated in the future.
Very much so, and I think with more and more data usage and pricing coming down, you're seeing the data growing, and the more smartphones we can put into people's hands, the more people tend to consume more and more data.
Yeah. What's the penetration like South Africa versus international operations in terms of those smartphones?
So it's still very low. In South Africa, we have 6.6 million customers now using smartphones of our 30 million customer base. In international, it's less than 25% of our customers having smartphones, and so we see that number, the potential to grow still being very large.
Network investment is incredibly important, and you've emphasised this ever since you took over a year ago, Shamil. How much have you spent, and what are your plans?
So combined, we will spend this year close to 10 billion. In South Africa, about 7 billion alone. Our intention is, and it's very much part of our strategy, Lindsay. So what we're doing is, through the network investment, increasing the capacity on the network, then bringing down prices and driving up usage, and that's helping us to balance our result, if you like. And also the increased data then obviously contributes towards that formula. What we intend doing now is to ramp up the level of investment in South Africa to complete our 3G penetration and really take it to 100% of the population, but also to introduce 4G in a bigger way, and effectively also bring more fiber to the home and fiber to the business into our plans as we go forward.
What about the competition? Are they investing similar amounts of money?
I think fundamentally, Lindsay, this is one of the issues that we face within the South African market. The reason why we've managed to put a gap between us and our competitors is because we've always outspent them. So we're putting the requisite investment in. Yeah. It's a capital investment business, so you have to invest if you want to see the success. And I think our competitors are not putting in nearly as much as we are.
What about mobile termination rates? That's the story that's going to be ongoing. What's the current situation? What's the Vodacom stance?
So where we are at the moment is we've all done presentations to the regulator, and what we're hoping for is that a more balanced outcome to the mobile termination rates, which will still encourage investment into the market. And I think really the issue is the extent of the cut. The fact that mobile termination rates has to come down, we completely accept. It's just the speed in which it's being brought down by. We think it needs to be a more gradual glide path down, so it gives us a chance to adjust our businesses to be able to compensate for it, as we've done over the last couple of years.
So you are happy with what the ruling is, or what the target ruling is, but you just want it to be done in a more measured fashion?
Well, I would say we're happy with the fact that the mobile termination rates has to come down, and really, yes, that it's done in a more measured fashion. So it allows us to take the necessary steps.
Okay, we've gone through most of the operations here. Now let's have a look at a story that came out in Business Day a few days ago regarding AT&T and Vodafone. And the implication of the article was that perhaps it might affect Vodacom's operations as well. Is that true?
So, Lindsay, I mean, at this stage, it's pure speculation, and we don't comment on any speculation.
Okay. Neotel, can you comment on that?
Yeah, a little bit. Obviously, we're still in the throes of final negotiations and so on. But we see Neotel really as an opportunity to combine our fixed business, which is subscale, together with the Neotel business, and that we can have a much bigger play in the fixed space, and really, take the second network operator, which is Neotel, and capitalize it properly. That will also help us and give us the capability, ability and speed to deliver on our increased capital investment a lot faster.
Time frame on this one?
Well, I mean, what we're trying to do is, I think in the next couple of weeks, we'll finalize the deal itself. And then obviously it's the competition approvals and the regulatory approvals. To the extent that we can get those faster, it will speed up our ability to implement quicker.